Good afternoon, everybody. It's Chris Robinson, Rob Tech Marketing with today's post codes, great and livestock comments. A little late today, but got a little hung up doing some family business. The net changes today. I got to say, it's nice to see beans at a 2 month high, Chicago wheat at a 3 month high, Kansas City wheat at a 7 month high. So it's been a very, very tough marketing year so far. It's been a tough 6 months. It's nice to see us up near especially the wheat. So it's a good opportunity. We're at 55 cents or so off the lows in wheat. Take advantage of that. Could we go higher? Yeah, I sure do hope so. What's the driver? Well, it's going to be one of these things, right? More buyers than sellers. I don't know. It feels like there was some short covering here heading into the long weekend. We are going to be closed on Monday. So tomorrow you'll probably see a flurry of activity early and then probably a quiet day rest of the time as people try and get another long weekend in. March corn finished the day up 3 3/4 cent at 431 and a quarter. D's corn, D's 25 corn finished the day up 4 1/4 cent at 464 even. Hey, we are 2 1/4 cents away from the high of the year in D's corn, believe it or not. The high of the year in D's corn was made on the day of the 12th on that January report. We hit 66 1/4, and then swan dive from there. No two ways about it. We went from 66 down to 45. So a nice recovery. Can we go higher? Of course we can. Will we? That's the question. Producers, most guys out there, they don't get healthy until we're probably north of 480, really healthy. Some of you guys tell me you can't make money unless corn's, at $6. I get that. But I think most people out here we're going to get up, and this is going to be the year. We haven't had a year like this in a while. I have to go back to the 2017, 2018 at times when all we needed was 443 corn. We got there once or twice. I remember it well. And if you miss the chance, then you missed your chance. So know what your break even is this year. The market does not owe you profits, but at least once to two times a year, my experience has been that you get a chance to market grain profitably. So um, keep that in mind. Know what your number is. Know what your break-even even is. Yeah, you have to factor in your basis. Everybody has a different basis. Some guys have a dollar over basis if you're on the East Coast. Other you guys out the West Coast, you get out to Nebraska and those areas there where your basis is horrendous. I get it. But what we can deal with is flat price. And flat price here at 464, it'd be very, very nice to get us back north of 75. I don't want to be in a situation where, uh, you've got a bunch of oversold calls. This is an exact time when we were down at 445 or 450. If you had somebody say, hey, sell a bunch of 475 calls against it because we're so bearish and blah, 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 that's when those strategies backfire against you. I have not spent more than 3 cents to 7 cents on a corn put so far this year. And that's the truth. For beans, I think I spent maybe 8 to 10 cents on bean puts. For wheat, 7 to 8 cents. Why? Because there hasn't been a lot to protect. So hopefully we can get some more push higher. Watch this stuff very, very carefully. New crop soybeans, 11.16 1/4. The high of the move when we had the November expiration and then spiked higher was around 11.30. So we're closing in on that. If you're not getting my letter, sign up for it. I've got some resistance up there in the form of an old trend line. It's not rocket science. It's not a secret. It's something that these markets time and time again get drawn to. So we're closing in on it. And we want to be able to make a decision when and if we get there. Again, good action in the wheat today in Chicago, finished up 15 cents at 552 and a half. Kansas City finished up 15 and a half at 554 even. Those are the best prices that we've had for Kansas City wheat going all the way back to, I'm going to pull it out here, all the way back to June. So, can we go higher? Yeah, it's never about can we go higher. Should we be going higher? Probably not, because nothing was really bullish on that last USDA report. This is money flow. Um, some people are getting out of their shorts. The funds have been short for a long, long time, and not unusual to see them maybe take some profits heading into this long weekend. So take advantage of it. Take advantage of it. Take advantage of it. Do not call a top. I'm not calling a top. Making a cash sale is not throwing the towel in. If you're making a cash sale into a 55-cent wheat rally, you're making a good cash sale. If you're convinced that there's going to be another dollar or two or three to go, okay, pull back 10 or 12 cents of that 55 cents you just picked up on the board and re-own it with a call and stay long, right? Stay long, but with limited risk. I would say the same thing about that right now. If we've made some bean sales here. Same thing. Don't be afraid to re-own it. You're selling it into a dollar rally off the bottom. So, get after it, guys. It's an opportunity, and Lord knows where we're going to be a month from now, or the next big risk is going to be the planning intentions, which is at the end of March. So we got 6 weeks of what if. What's driving all this? Who really cares? I'm to the point now. Fundamentally, we all know that there's a lot of bearishness out there, a lot of reasons to be bearish. Big yield, big carry out, et cetera, et cetera. Our soybeans are a buck more expensive than South American soybeans, but yet people are buying our beans, or at least China says they're going to buy our beans. They're considering buying more. I mean, I had my first wife. She considered staying with me. So you never know when people start throwing those words around. I'm much less concerned about the why, and I mean, I'll be honest with you. I was bearish beans on this bounce, and when you're wrong, you've got to admit you're wrong and say, okay, let's make sure we keep the upside open here. Stop fighting it. We do know that the funds are long beans. That's the one contract they're long. They're still short corn and wheat, but not massively short. They could flip that stuff in no time if they really wanted to. And I think that's what's driving wheat right now. They were short about 100,000 wheat. They're taking some profits there. So, all right. And moving on to the protein complex. Are we or aren't we, right? It looked like they were going to try and crack off, another correction here today. We did come back. March feeders finished down $1.70. Tomorrow's going to be a big, big day. It's the end of the week, going into the long weekend. We'll have to wait and see if we can get March feeders above 370, or are we in danger of taking out 360? I know it sounds like a lot of risk, but that's kind of what you're at when you look at the March feeder contract. April fats went up and filled that gap, right? 241.40. The gap was, I think, at 241.25 or 30. So we filled the gap and then backed off about $1. No explosiveness either way. I think that was kind of an odd move there as well. But again, I think they're kind of kicking the can until tomorrow. And the probably the most disappointing or the most corrective market was April hogs. April hogs had rallied nearly 19 bucks from November 21st when we traded 81.10. We hit a high twice at 99.75. Today's low, this 91.80. It's about a 45% correction of that rally, and we see that time and time again. This is why we hedge. We try to hedge and we try to roll up our puts into good rallies, because what took 7 weeks to rally from November 21st till basically last week, in 5 days you lose nearly half. And if you're looking for those retracement areas, I run them every day. They are not a secret. Most people don't bother to do the homework. They are not infallible levels. What they tend to be are areas that everybody gets excited about, both bulls and bears. It attracts a lot of attention. You still have to make a decision what you want to do. It doesn't absolve you from making a decision. But 92.68 with the 38% retracement for the Aprils. The next risk below looks to be about 90.50, 90.49. That will be halfway back. Okay, so if you've got puts on, get ready to roll them down. If you don't, get something on cheap. It could just be a normal correction, and then next week we're a lot higher. That is why we roll the puts down. When you have a put on, which doubles or triples, you got to get paid, because just as quickly as we sold off and those puts gain a lot of money, they can evaporate very, very quickly. So we try to take profits and roll those down when we can, all the while leaving the upside open for our producers who are always longer animals. All right, thank you so much. Have a good rest of the night. We'll be back tomorrow for Friday. We'll see how we finish off the week. This is Chris. Have a great night. Thanks for listening.